Thank you as always for sending me the numbers, Danny. This is for homes sold in April now,
Yep.
which would make this the May market update. We're going to run through number of homes sold. That's an idea of the market in general, average versus sold list price, percentage over and under asking, how many houses are going over and under, days of the market, the number of price reductions, the mortgage rates, and that should probably be it. But let's go through this. Danny always pulls numbers for the previous month so we can keep up on this market. You want to go through the general market numbers, Danny? Let's start with the first one.
Yeah. So homes sold, you can see, is up. 2,087 homes were sold in the month of April. That is up 16% month over month, 3% year over year. Currently, we have 2,816 active homes out there, which represents 1.35 months of supply, which is very much a seller's market. There's just, again, a real constraint on our supply in the market. The other note here, of course, is just seasonally, we tend to take a bounce up from, the early start in the year where things are cold in January, and they really start to pick up in the spring. So this is not a big surprise as follows our seasonal trends.
Yep, another big uptick in the amount of activity, and we're seeing that anecdotally out there. Now, this is where I think most people are most interested. What are they selling for versus what are they listing for? And we know that this is also a seasonal effect. Let's run through those, Danny. Big numbers here.
Yeah, exactly. And these really tell us a lot about the state of the market, right? And that's kind of why we picked these particular metrics. So we can see what people are listing their home for. They're listing the average list price is that blue line. So just a little over 400,000. So 403,000 and change was the average for the Central Ohio market. And you can see the orange line is what they actually sold for. So that was just a touch under 400,000. So a little bit under what asking is, but you can see the trend there. And we run this back a good, well over a year, just so you can see the seasonality of all of it. It picks up. Those lines really start to converge during the hottest months of the year. And it looks like we're coming out of the kind of the winter freeze, so to speak, as usual in the spring. Things are thawing out. And those numbers are starting to go back up. Not only are they going up in terms of price, but the lines you can see over the last couple of months are starting to come closer together. And that's a sign of competition in the marketplace for that constrained supply of homes that we looked at on the last slide.
Yeah. And one thing we always track here is even though we have seasonal shifts, that number consistently goes up for home sellers every year. We're about 12,000 or 3% on average year over year, meaning this April over last April. If you waited a year to sell, on average, you're going to be $12,000 richer. So that's been consistent over the years. We expect that to continue. That's real estate, just in general. The next chart, our donut chart, is the percentage over and under asking. I'm going to go over this real quickly because the way Danny tracks this numbers, it's a little unusual. We're looking for anomalies here. More or less than 5% of asking price. So on a $500,000 house, $25,000 more or $25,000 less. What are the outliers? And Danny run us through the numbers there.
Right. So you can see the biggest section is just things that went pretty close to the asking price. That's the blue section. It's about 70%. Usually we see that between 66 and 70% as we've been tracking this over the last several years. So it's a little bit more there than in other months. But the thing that's happened a lot recently is the trading from the orange, so below asking, to the green, which is above asking. And you can start to see here that there are fewer homes going below asking by 5% or more than there were homes going above asking by 5% or more. So those lines or those segments of the circle tend to switch as things heat up during the spring and summer. And no surprise here, that's happened over the last couple of months. That green section has gotten bigger. The orange section is starting to shrink. And again, it's just a reflection of how competitive the market is at this point.
Yeah, and that's, again, a product of seasonality, as we expected, along with the next two charts, days on the market and price reductions. I'll let you do the numbers, Danny, but I do want to point out, over the years, we've noticed anecdotally that the median is a better indicator than the average on the days on the market chart.
Yeah, and they do follow the same trend line, but you can see that median is down to 12 days. And again, coming down from kind of the slowest point of the year over the winter. We expect that that's going to continue. If you scroll across to the left and see what happened last year, things dropped down from 16 days to 10 days to 7 and 5. Fully expect that to happen over the coming months. This is a good sign that things are quote unquote normal for our market, at least as far as they've been for the last several years, which is a good sign. Things are picking back up. There's more competition.
Yep. And then finally, price reductions are going down as expected as the activity goes up. We're only at 24%. Is that what that says?
Yeah, so about a quarter of the home sales last month were after a price reduction. And you can see, again, this follows, kind of an up and a down and an up and a down over the course of the year, right? As things get less and less active, homes sit for longer. In order to get interest, there's more likelihood that there's a price reduction. And that's what you see over the winter months. And you can see that things kind of staggered their way down this year compared to last year. It was kind of a smoother curve, but we're very similar to where we were this time last April. That was at 20%. We're down to 24%. You can see we just had a higher peak this last winter than we did the year before. And so again, the trend is normal for what we would expect. And if we were betting people, we'd probably bet that when we come back a month from now, it'll be even lower than 24%.
Yep, that's what I would bet on. Final slide, mortgage rates. That's going to come up a lot more, I expect, in the coming months as the economy starts to shift and balance out and figure itself out. I do want to mention this, though. I would not expect mortgage rates to go back down to the 2s and 3s like we were for so long. That's an abnormal rate. We just had it for a really long time. 6 and 7% is probably where you should expect. If you get into the 5s, you're getting a great deal. Keep in mind that it can go up from there. If the Fed decides that we're in stagflation, something has to be done about it, it will spike those interest rates. So that there is strong potential that this could be 9 or 10% in the year, which will definitely affect our market, assuming that all the other sections of the economy go wrong, basically. But everyone's waiting for the lower interest rates. Keep in mind, they can go higher. They're more likely to go higher at this point than I think they are to go back into the 2s. So make peace with the idea that this is about where we're going to be, I think, for the next several years. This is not a bad interest rate. I know it's not what a lot of people are used to, but historically, this is a pretty comfortable place to be. And I feel like we're going to be there for a while unless something goes wrong one way or the other. That's a general wrap. Again, Danny pulls these numbers every month, and he pulls them himself. We do not rely on the industry standard numbers. This is the map of our zip codes, showing sales as well. So if you are curious as to what zip codes are hot nowadays, you can always refer to this map. Tell your friends. We'll bring more updates next month. And Danny, thanks as always for running this and making this look pretty.